Hello and welcome to the sentiment analysis for the week of July 26th. Last week was interesting, but it actually stayed pretty much where I thought it was going to be. We have a lot to talk about, so let's get into it. Before we get to the chart, let's demonstrate exactly what my sales or position sell-offs looked like last week. Okay, we are in my VPS and we can see a list of trades over really the last month to get an idea of exactly what we can see within the market and how those trades have actually played out. That is important when you really look at the significance of the amount of days involved for the duration and the frequency of the trading in relation to the back and forth of the working range we have been demonstrating. As we look at the days or duration, we can clearly see a pattern that looks to be ranging to some degree, meaning less than 24 hours, but at the same time, as it's picked up older positions, we can clearly see the pattern developing on those older positions. As you look at the matrix of how this works out, in terms of the number of days that a position might hold for average, you begin to see that we are still in a slow downward slope. It's almost a flat range, but not quite. So let's get back to the charts. In looking at the chart, we can see that this month is now a red month. The last month on the chart, July, is now red. The opening price is higher than the closing price. So we can clearly see what my actual trade metrics showed in terms of the volume of trading. I am still progressing in that slight downward slope. Let's zoom in a little bit. Now we can really see how July looks in relation to June and prior months. And we can clearly see a very strong bearish force. Not as strong as June, but definitely the presence is there. The back and forth between the bulls and the bears kept the candle reasonably small compared to June, but it's still an aggressive downturn for what we've seen in the market. So let's zoom back out and look at the order book. So looking at the order book, we can clearly see some changes from last week, and we can see some interesting points in terms of where the market might go as we move towards August. First, let's talk about below the green line, the current support level. Last week we had indications of a reasonably strong market influx in this area. But this week we can clearly see that has shrunken a lot. A very significantly smaller window in terms of where market interest is. So we see that there might be enough pressure to push upward the next coming week. But that is also confirmed when we look at the order book itself above the green line, and we see how much actual interest there is in selling above the green line. There's a significant interest compared to previous weeks. So we have the traffic and the order book with the limit orders. We have investors looking to get out, to capitalize on this current drop, and to push prices higher over the next week, maybe further. But what's interesting about this is when we look at the buy order book, we don't have the big spikes up in this range right now as we did previously. Now the spikes have shrunken down drastically to a very tiny range near the lower level support. So we're no longer looking for pressure at the 116, 117 range, but significantly closer to where we are at right now, within the 113 range. So that's a very interesting divergence compared to the sell side of the order book. So we're seeing buy orders getting in closer to where we're at right now, but the sell side is looking further up, closer to where the previous buy sell was looking for, or excuse me, buy side was looking for. So as we progress and fully look at next week, I think we could see an upward push. That would be nice, really. Accumulate a few more positions, get that back and forth between the bulls and the bears, and then go in terms of a reasonably decent August. So let's look at the daily chart right now and see how that looks comparatively. Okay, as we look at last week, it was pretty much a bear market all week. We had one day where the bulls actually did something, but it really was engulfed by the previous day. So even though the bulls tried to recover on Wednesday, the bears set Thursday into a hard line drop. The bulls never were able to recover what they lost on Tuesday, though. So we can clearly see that downward pattern, that shift where the market is still sloping. And that really is an important point that we need to be aware of when the markets open up on Monday. Whether or not we gap downward like we did last week. For example, we see the price last week and then the opening price of, the previous week versus last week. So this is Monday. The opening price on Monday gapped down compared to the closing price of the Friday of the week prior. So we could see where the overall market shift really took a hit. Now, whether or not we continue that pattern for Monday is really going to be a significant question, because I think there's a good chance we will. Even though the market looks like it might be slowing down on yesterday's Friday candle, that doesn't really mean anything in relation to what we saw the previous week and where that gap took place. So I think it's something to be aware of. If you are long trading, that might be a stop loss trigger. If you're short trading, that might be a take profit trigger. Either way, risk mitigation is critical. But really, that is the whole week. We see it, we're there, and for the most part, I don't think it's going to change much. Looking at the weekly chart, I think we see the same patterns echoed that we have on a daily and monthly. I think next week is going to be a continuation. But share your thoughts. Let me know what you think about this market. Has it been good for you, or have you seen difficult trading expectations? As we really look at the week coming, I'm interested in seeing what you think is going to happen. Thank you for watching.